Quick daily market analysis for Friday, December the 12th. Hi guys, I'm Don. I'm a financial analyst and a trader in American markets. Had a broad-based sell-off today with the NASDAQ leading the way. That comes to the back of Broadcom's earnings that did beat on estimates and their forecasts. Forward-looking forecasts beat on analyst estimates also. However, concern was sort of arose around margin compression there, so shrinking margins specifically on their chips there. So that sort of weakness and concern spread into the AI sector there, and AMD and NVIDIA stocks sank as a consequence, and that made a risk-off sentiment there. The market sending stocks into a bit of a downtrend as a sort of pullback is coming into play as we're heading up into the end of the year. And over to European markets where stocks fell as well. That's as we had inflationary prints out for the Eurozone, showing that inflation pretty much stayed flat there. That is still concerning investors as they believe the ECB will stay on the sidelines there and not reduce interest rates. However, analysts are still bullish longer term about European equities. And over to UK markets where stocks fell. That's as we had a GDP reading out for the third quarter in the UK, coming in a contraction of 0.01%. That also made the pound drop as a consequence. Traders and investors were now pricing a possible rate cut from the Bank of England there, so pressuring the pound as a result. Traders and investors are concerned that the economy may be continuing to decline. And lastly, over to Canada's TSX, where the market fell on the back of a falling oil price, which pressured the energy sector. We also had significant weakness in tech stocks there, with that negative sentiment coming up from the US over tech valuations. And we also had significant weakness in the banking sector there, as traders and investors were concerned about the sort of future direction of interest rates, feeling that they could move higher next year, and also concern over loan growth. We also had forecasts out from economists for next year showing that they believe that the economy will slow down to 1.2% in growth because of all the macro factors and concerns over employment.